It's like, what's the difference between you and the average trader? Why?
You mean that I'm beating S&P?
Yes.
Yeah, for sure. I mean, S&P is moving how much? Like 10%.
How much money you're controlling under your management?
Easily I can have, let's say, 10 millions of exposure or something like this.
That's dollar,
yeah.
$10 million.
$10 million, like easy.
Comfortable with my question? Just say shut up and I will just shut up. Right. That's all fine.
Yeah, it's all good. It's all good.
How long have you been trading?
So I've been trading since 2013, end of 2013, October. I started on the real account, 11 and a half years, I would say.
Are you at the top 5% of the trader or are you losing money?
Top 5% of the traders were in the company or in the world?
In all over the world.
I'm definitely on the percent in where people are making money. So except 2022, in which I was flat, in every other year I made money from trading. And maybe not 2013 because it was, 3 months or that I traded, but for 11 and a half years I have one negative year as trader.
Why you are profitable, and when I say profitable, consistency, reliability, and logical.
Yes.
Maybe you are profitable, but it's not logical what you do. It's like, what's the difference between you and the average trader? Why they lose money and you make money?
Yes, that's a very good question. So first of all, there are a lot of, I think, elements for good trading, but there are 3 or 4 or 5 that are very important. So for example, I'm very disciplined and I've been very disciplined in my trading and, overall in my life all the time. So in trading, if you don't have the discipline, and it's very, very hard to do these things. And there is another thing that I need to mention here is that what we do and the way I trade, and especially my early years, the big part of me being successful and being profitable is having the company and having the mentorship. Because there is a very big difference between me trading at home or, not me, like anyone trading from home and trying to figure out trading, and me having the mentors and having access to not only personal mentor who is sitting next to me and who I speak on a daily basis, but to have access to the people who are actually making money. So if you're staying at home and if you're trading alone, maybe you can have access to some kind of community or some course or YouTube videos or whatever, and maybe, you have big portion of what's needed, but it's still very limited in my opinion. And when you're on the floor, first of all, when I started in the first years, like I started in a group with, I think was 15 or 17 people of us. So we started together and we have the similar background and we started the same. We started trying to understand how to become successful traders. And we all did the mistakes. We are all sharing experience together. We are speaking on a daily basis. I did this. Like somebody starts making money or somebody at least makes money for the day, somebody else doesn't make. So we share ideas. I see what the other people are doing. And what's most important for me through the years has been also like, I can see the screens of everybody. So when we're here on the floor, I can go and see everybody's positions, everybody's P&Ls, everybody's like what they're trading. For example, there is somebody who is making money in certain stocks. I can directly go and ask him, why did you bought this? Or maybe they're short, why did you sell this? What was the reason? It's very easy for me to understand the ideas. I have my mentor and I have these people. So this helps me a lot through the years because again, like on a daily basis, first of all, like I'm trading and, I have access to the markets and I am trying to understand the strategies that people are teaching me, but also I speak with the people. So for example, if I don't know anything about YouTube and if I don't know anything about how to do a podcast or, but if I go and I'm speaking with you and if I spend 5 days with you over the week, like very easy, I would achieve and I would do what I would do on the normal. Side. Here is the same. So this for me has been a very big factor to be successful because I have these people and this community. For example, me and you, we are starting together And like we make pretty much the same P&L, we make pretty much the same mistake, and like we help each other, we learn from each other. Like I see yesterday you made a mistake and I may not do it simply because I saw you did it. Then today you're gonna see like I make a mistake and you're gonna learn from it. So this also scales up the process. We are also limited in this because like I can check today 10, 20 stocks or something like this. But when I'm on the floor, like if I can check 20 stocks, there are 10 more people around me who are checking 20 more stocks. So I can easily pick, literally I have people with which I'm trading and we're just exchanging ideas. So today before the market opens, I'm coming to you and I'm asking you, what do you think we should be buying today? So you're giving me 5 ideas. You ask me the same, what do you think we should be buying? And like I give you my top 5 ideas. And this is like pretty easy for me. Like I made a lot of money through the years, like tons of money from other people's ideas. I simply just bought the stock or I sold the stock if we were short. This also helps.
Okay, let's talk about a little bit your strategy. I want to understand what kind of trader you are. Are you a scalp trader?
Yes.
Algorithmic trading? Like what do you do?
Yeah, so what I'm doing is the best way to identify myself is like I'm gonna be following the trend. So there is, term called trend following trader. Yeah. So I would identify myself like this. And I know that some people from your community had these questions that like, do you need to only do day trading or do you need to go through, some different type of strategies? So for myself, the books that I read and the mentors that I had, they had very big influence on myself to be able to go to that style. But in the beginning, in my first years, when I was trying to build up money that I have for myself and, to prove myself as a trader, I didn't had such a big time frame, meaning that I was not able to hold positions for days or weeks, or sometimes we hold them even months, not that, big percent of our trading, but we do them. But most of the times, days through weeks, it's going to be something that I do because like if you see any type of stock, if you just, even historically study stocks and you see how most of the people made their money, and even, if you study even investors, like how Warren Buffett made his money, all the great investors that are out there, they didn't make them in one day or in 1 year. Like Warren Buffett buys Apple in, 2014, 15 or, whatever was there, and he holds it until this year. So he holds it multiple, years and etc. And for myself, like I'm not there yet where I can be, holding positions for years and etc. But still, like stocks move, in waves, and it really doesn't matter if it's on upside or it's on downside, they move on waves. So if I'm scalp trading, like I'm going to be trading the stock just intraday, and I'm going to be able to take some, fraction of the daily move, which is good. And, if I can size them right and if I can do proper use of leverage that we are having and etc., I can be very good. But with the time, I decide and, I saw for myself that what is fitting myself, my personality, and what I actually want from the market is to be able to sit through these waves in which the stocks are moving and they're making money. So in the last years, almost like I would say 90% of the money that I made has been through this, swing trading and trend following, which means that stocks are going up, and like I'm trying to catch this wave. And for myself, my strategy is also important to say that like I'm not trying to pick bottoms or I'm not trying to pick tops, because like I'm also going to be shorting, meaning if the stock starts going down, like I may even try to short it and make profit from this. But I don't want to short it from top because no one knows where the top is, and consistently you cannot predict and pick where it's going to be the top or the bottom. But once the stock is bottomed and etc., and it starts to be trying to move the next leg up, then I'm going to be trying to enter and to ride it until it proves wrong, and then I'm exiting. So let's say a stock goes from $20 to $23. I'm not going to be taking these $3 from the whole move, but even if I take $1.50 or $2, for me it's okay. And always I know, that's part of my strategy, I always know that I'm not going to be buying from bottom, I'm not going to be selling on the top, but what I'm catching in between is more than enough for me.
Okay, so to specify, what's your holding period of a position? The medium position, let's say.
Yeah, my holding period, it really has variety because sometimes market is different. Yeah. So if we have uptrending market, my holding period is going to be way longer than if we have a market in which we try to go up and then we go down and then we go up and we go down. Like if we stay sideways, my hold up period is going to be way smaller. So it really has variation, depends on the market environment, but it's going to be from couple of days, from 4 or 5 days to couple of weeks. Again, really depends on the stock and really depends on the how to say it again, like market environment, how conducive is and how good is it for my trading style. And also I'm going to be exiting some portion of my position. So let's say I buy 2,000 shares of a stock, okay, and the stock starts going up. I'm not going to be holding the whole 2,000 shares. So when the stock goes up and I'm having something like 1.5 or 2 points risk.
Partial profit.
I would take profit. I would take like 1/3 of my position or 1/4 or something like this. And then if the stock goes higher, then I'm going to be closing a bit more from it just to take profit into that strength. And then the rest of the position I'm going to be riding. So it's not that, I'm just going to be buying and then selling on the whatever I decide to sell. It's not going to be like this. Like I always have some portions. So.
Wow, earthquake.
Was this earthquake?
Yes, it was.
All right.
Yeah.
Was this earthquake?
Yes, yes. Let's continue. I want to ask about high frequency trading.
Yes.
Why you're not following that path?
I'm not that so much familiar with high frequency trading. I read a couple of books. Probably the most famous is Michael Lewis' Flash Boys. I'm aware of it. I know how it's happening. But the reason I'm not following and I'm not interested in this is simply because the company doesn't do it. So in order to do the high frequency trading and all the things that are included in it, like you need to have some kind of infrastructure and the strategy and everything else, which is simply something that we don't do and we don't have. And I'm, especially in the beginning, in my early years, I was following what company was teaching me and what was working for basically everybody who was listening to the mentors and making money. And then with the time I was able to find my style, as I said, and was able to identify my strengths as a trader and to be working on my weakness, so I can be more self-sufficient into the markets and to be able to extract more money from the markets. So high frequency is simply something that we don't do and the company is not interested. And trading overall, as I'm sure it's divided to so many things. So there is high frequency algorithmic trading. Even if into trading, if you go like there is scalping, swing trading, position trading, investing, and the trading game itself, it can be maybe you work for institution, maybe you work for the bank, and etc. As far as I'm familiar, for example, in Turkey, there are a couple of floors for the banks and they're trading and they have people and etc. So it really depends on what you want to do and what you are taught to do.
I was also a trader, and right now I'm not trading, I'm only investing. So you can go deep.
Yes.
We were trying to build models, and then but the model that we use, it was the human interference, not only the robots or the algorithms. So we were collecting the data, but the decision making was on the traders. So right now you're trading against the robots, algorithms.
Yes.
Like, how do you do that?
Well, one way we do that is actually, I hear this a lot, and honestly we have a lot of questions from new people who are coming, and we teach them, and maybe even on the interviews we have this, but I always think in that way, like, how can I take advantage of this? Of course, I may be trading against some algorithms over there, and I'm trading against some softwares, but can I take advantage of this? And the second thing is, even algorithms, as you said, they may be trading, but like the decisions behind the algorithms are taken by humans. So maybe you're the one who is trading with algorithm against me, but you take the final decisions. So I'm more trading than you. I'm more trading against you than against the algorithm. So what we at least try here to teach the people, and I think we have some very good guys who are trying to take advantage of this, is like they are trading with the algorithms. So in the products that we trade, and some of the ways we trade, like for some people who are here with us for maybe a couple of months or year or 2 years, for them it's very easy to realize when there is a, as we call it, like buy bot or sell bot in the product. So we see that somebody is accumulating the stock. So what we are trying to do is just, to give brief explanation. It's like the people are trying to take advantage of this. So maybe they front run the, the robot, or they try to buy before it. And like as long as the price goes up by the, the software, they goes with the price, and then they are selling. So there is just one simple way in which we are, trading with them and taking advantage of them. Also on, algorithmic side, I can say that we have a couple of people who are, trying to build their, own algorithm or their own trading. But I see the same thing as you're saying. It's that they maybe program, the algorithm itself and how it's going to be, but like most of the decisions is like they are taking them, or they are saying like, I have proprietary rating for the stocks. So like I rank the stocks myself, and then algorithm just buys them or sells them based on what I'm telling him it's, overvalued or undervalued in the price. So it's just the people that are, setting the algorithm. So I think this is good and there is no problem.
Why we try to follow that path? Because there's a book from Gerd Gigerenzer, How to Stay Smart in a Smart World. Mm-hmm. And why the book explains why the human intelligence still beats the algorithms.
Yes.
So we were collecting the data, like 90% our job was collecting data and mining it, and then 5% was the hypothesis testing, etc. Only 5% was really trading, if you say so. What's your biggest fear when you trade?
Honestly, I don't know, but my biggest fear, when you have, I would say, more than 10 years into the trading, and you are successful in it, I would say fears are outside trading. But in trading, I don't want to say that I don't have fears. Like in the past, I used to have these fears of, taking big risks, and, positions goes against me and I'm losing more than I actually, deep inside me want to do. But as the time goes on, and, as the money that I'm trading with becomes more, like that's, not something that I'm concerned with. And, on the trading side, I don't think that I have any fears from that side. And honestly, since we opened the office here, it's very funny that most of my fears are not, connected to me, but they're connected to the floor. So most of my fears are like about, somebody's losing money, or somebody's in a drawdown, and maybe, somebody needs to do something. So, and maybe somebody is doubting, maybe, they want to quit, or they're reconsidering their pattern, etc. And I see that they're a good trader and they have the potential. And, they just need to find the strength to stay within the pattern, to try one more time. So most of my fears last, I would say, 3-4 years are connected with this. But in the trading side, once you have the, clear path and the clear trading plan for yourself, if you are able to, really break it down, and honestly, like, I remember last year even had this type of lecture in which was like just showing everybody my trading plan, which is A, B, C, D, everything, from position sizing, from that. So when you're able to, crystallize this and have this trading plan for yourself, you just need to follow it, which, I'm not saying that it's easy, but like if you do this, like you are throwing so many fears out, and you don't define yourself by the, results, you define yourself by the outcome.
How much money you're controlling under your management?
If I say a lot of money, it's, different for different people, but like easily I can have, let's say, 10 million of exposure or something like this. That's
Dollar,
yeah.
$10 million,
like easy. And the other thing also with the company is that if you're somebody who is proven yourself, you have the track record, you have money behind, and you proven yourself that you are not somebody who is reckless, who is, able to control risk, and who is able to do everything that they can do so they can protect themselves in the tough times, the money can give you more money. Like, I don't go and ask the company for more money, but I'm in a position in which, like, I literally can have not all the money that I want, but I can have significant amount of money, under management and etc. And there are periods in which, like, I use this money, and there are many periods, like for example last year and etc., in which, like, I'm using fraction of this money simply because the market is not good for what I want to do, and I'm just staying on the sidelines.
Are you more profitable than the S&P?
You mean that I'm beating S&P?
Yes.
Yeah, for sure. I mean, S&P is moving how much? Like 10%.
10%.
And
average.
for what we're doing, and we're using leverage, I had many 10% days on my account through the years, and years definitely I had very, very big years. So as far as return goes, and also it's very, like, we measure this, how to say, by return, but let's say I'm a trader who is having like $10,000. And last year S&P is how much? 22, 23%, something like this up for the year. And I'm, 30% up for there. This is just going to be $3,000. So like, if I tell you, I made 30% last year, most probably I didn't make that much money. Because like when people speak with each other, like, at least this is my impression with the people that I'm speaking, they speak in money. I'm not going to tell you, but if I had like 1 million and I made 30%, which is 300K, I'm going to tell you last year I made 300K. I'm not going to tell you 30%. Yes. And then I don't care how much S&P made. No one cares about this. But it's very good, to have some kind of benchmark. We, within the company, don't have it so much as, benchmark to measure. I think the biggest benchmark are the people, because sometimes, you are the one who is making the most money for the month or for certain period. Sometimes it's not. And most of the times, because you have big company with a lot of people, like, it's not you who is making the most money. And that's good. So, I definitely beat S&P. Okay,
so 12 years, a lot of experience. I want to ask you something. Let's say I make around 20% per year.
Yes.
And let's say I have zero knowledge about trading.
Yes.
Should I just keep doing what I'm doing, or should I just learn to trade?
How do you make this 20%? Just by investing in S&P, or how?
Just by investing.
Yeah.
Long-term investing, diversification, following some rules.
Yes.
But not in the
trading.
United States, not in the trading,
yes.
in the Turkish stock market, and I make 20% dollar-wise. What would you
dollar-wise? Yeah, I would tell you to do what you are doing, honestly. Because if you quickly do the math, 20%, if you are able to compound them, in 10 years, you're going to be very wealthy man. In, 20, 25 years, you're going to have all the money in the world probably that you want. And if that's your goal, like for myself, I found this job and I went into the trading because I wanted to, become rich and make money. But, at some point, this becomes, because this profession is, too long term. It's not something that you spoke with with Deniz on the first interview that he had. It's not get rich quick scheme. It's not something that you do for 1 year and you make the money and then
done. You're done.
You're done. And even if this happens, and I don't know, I heard stories about people who go into the crypto and make some millions of dollars or whatever. then what you're gonna do with your life? That's the second thing. So the question that you're asking, in my opinion, is just, I think everybody should be doing what is, their, calling, or what they are seeing as their occupation. So for myself, the market really keeps me engaged with the whole world, not only, by reading the news or something, but just, trading the stocks and being actively involved in everything what is happening. Just this keeps me very engaged with world, and I like it. So that's why I'm doing it. And if you or, somebody else who can compound their money on 20% in whatever they're doing, that's perfect. And I think they should be doing this, because with the time, also accept that money that you're going to be compounding, there is going to be very big satisfaction, because you're going to be doing what you want to do. Because we have this on the interviews, a lot of people are coming and they say, like, I don't want to be doing this boring work, on the computer with the Excel and everything. And if you're not that guy, if you're excited every day, it's not that like, I need to go to work today, my boss is going to be, harassing me and etc. If you're excited about what you're doing, and, if you see the joy, and also like you can go through the tough periods, because, it's not going to be just, machine compounding 20% every year. It's going to be some ups and downs and etc. If you're happy with this, you definitely should do this. Like for me, for example, like if I need to do something different right now, like very different from what I'm doing, it's going to be very hard for myself.
Do you have a year that like lost year, or maybe 2 years, 3 years? In investing, it can happen.
Yes.
What about trading?
In trading also can happen. So I have a lot of periods in which, for example, I'm not making money. I have a periods in which, that's my trading style. So my trading style is not, somebody who is super consistent, who is making money every month, every week or etc. There are some traders like this, and again, like we have some traders like here who are machines, and I have huge admiration of them. But my trading style is not like this. My trading style is like I have small negative months or small positive months, and like I have big months. I have a 1, 2, 3 months. That means
you're not cutting, you let your winners run.
Yeah, exactly. Yeah. And, I'm trying to control my losses. That's essential of trend following. As I mentioned in the beginning, essential of trend following is like cut your losers short and, let your winners run. And, couple of big winners pays off for a lot of losers. So you just need to be able to stay with them. So also, again, like I have periods which are not easy, in which maybe 1 month or 3 months, or like sometimes it's like 5, 6 months in which, underperforming, meaning you're not making money, you're even losing some money, and you're in a drawdown. And, every day you're coming, you're doing what you're supposed to do, you're trying trades, and, you're slowly bleeding some money. So this brings frustration. And then the most important part is, what do you do? Like, this is something else that we teach the people, that it's very important. And I was thinking about this a lot, because right now everybody would sell you course on how to become successful and how to make money in trading, but no one is selling course in which like how to keep the money, because that's huge part. And I saw many people, and also me myself in the beginning, it's like if you make the money and then you lose them next month,
there is no point then.
Yeah, what are you doing? If you make $10,000 last month and you lose $10,000 this month, like, are you a good trader after these 2 months? Like, everybody can answer different, but, if you make 10 and you lose $2,000 and you keep $8,000, that's better. And it's not gonna be like you make money and you don't give back anything. It's just simply not possible. But it should not also be possible to be doing this. And like, let's say you make $10,000 and then you lose $2,000 next month, and then you lose $1,000 next month, and then you lose $1,000 next month. So these 3 months are a lot of pain and a lot of frustration, and a lot of emotions that you need to deal with, a lot of things that you need to deal with. And these are, kind of tough periods. With times become easy. It's not always that they go away, and you cannot be the machine who just goes without emotion, but you learn to do this. So I have this, and as I said, like, for example, 2022 was this year for me in which, like, I was always behind. For example, like, market goes down and I'm late to short it, and I'm shorting near the bottom, and then market reverses and I'm the first one who gets out. And then market tries to go up, I'm the last one who is buying near the top, and like, I'm just having these slow paper cuts, and I cannot make progress. And also with us on the floor, and the place that we are, is that you have people around you, and almost every day somebody is making money. So you're coming, you're also doing your best, but you're not making money, and somebody effortlessly is just making tons of money.
You see a guy like cheering, yes, and then you're looking your P&L, and then lose another month loss.
Yeah, and also, like, you speak with the guys, and the guys are, it's not that hard. Like, you just short them here, and you buy, and you cover the positions, or like, they're speaking like, and sometimes I also have this, which I say, it's pretty easy, but when you're in this emotion, and when you just cannot see how, to position yourself in the market, but somebody else is like super confident, man, it was super, you speak with them, last month was super easy. And like, I'm going through so many frustrations, so many emotions because I cannot catch, and somebody's making money super cheap. Super easy to make money last month. I don't know how not everybody made money, and I'm, come on, like this, This also brings frustration because, like, if you're at home and you don't have access to these people, you cannot feel these emotions, you cannot see them. Like, maybe you are negative, maybe you lost money this month, but you cannot speak with somebody who actually made money this month. And also, that's the other side with which, like, sometimes how I'm exiting from these draw periods is I'm simply trading with somebody else. Like, there is somebody who is making money, so I'm just following him.
So you're just sticking to him?
Yeah, I just stick to him. Like, what do you plan to buy these days? Like, what, kind of want to know their game plan. And I see what they're buying. I'm trying to position myself on the same stocks or similar stocks, and etc. I'm trying to follow their plan. And once I start making some, green days, we say them green days, like, some money for the day, and etc., it's way easier for myself just to clean my mind and to try position myself better. But this also option. And this is something that you cannot do from home also.
Yeah, in investing also, like, when you start bleeding each month, it's not easy to stay in the market. But investing terms, you have to stay in the market, especially those terms. Because if you just go out now, then you're losing your potential. So it's like, there are many similarities, but many also the contradictions when it comes to trading versus investing. So I want to go from the investing part, and then you go from the trading part, and then let's do a little bit brainstorming. Because I'm an investor. I don't do trade. Like, I don't even, there are times that I don't look even the price for weeks. I don't care. I know that the company is doing well. I know that, so the price goes down 10%. Fine. So what do you do if your position starts to go down? What do you do?
I tried, investing myself after many years of trading, and I simply saw that it's not for me.
It's not for you.
By the reason that you are saying, and I can say about this also later, but anytime I would be doing the same thing. So if the position goes against me, I need to have some kind of reaction.
You just cut.
So most of the times, yes, but the reason I'm saying reaction is because, like, maybe I'm not cutting the whole position. Maybe I can get rid of 30%. Maybe I can get rid of 50%. Maybe I can get rid of everything. It really depends on, like, what is also happening, with the general markets, with the indexes that I'm following, with the, indicators that I'm following, all of these things. It's going to be having weight in my decision. My P&L is going to have weight in my decision. So, but, in my plan, in my trading, it's included that I would definitely do something. And, people see this also when I'm on the floor here, like, I take some positions, I take some portfolio, position move against me, and like, I reduce it. On the end of the day, like, I reduce something, and people are like, you're reducing, and I'm saying yes, because, the position doesn't go with my side. So that's what I'm doing, but it's very specific. to answer that question, but the general answer that should be for everybody is like, I'm going to be taking some action. It's not going to be, I'm not doing anything. And that's the tricky part between trading and investing, because in investing, you can do your due diligence, you can do the decision, and you know that the price is going to be fluctuating, as you said, 10%, 15, 20%, whatever. Maybe general market is in sell-off,
yes.
Maybe something is happening, but you know that the company is good. So you stay with your decision. And that's part of the, also the plan. But in trading, like, it's not like this. And sometimes in my early years, and especially I would say my first year or so, like, I had this problem, which is, I think, ego problem, which is I made this research, I made these decisions, predetermined decision, which is like these stocks should go higher and then they go lower. And I want to be right. And I want to see them go higher, even sometimes more than making money. And like, that's my ego speaking. And the ego is saying like, you should be right. And sometimes it's because just school teaches us like this, I want the market to grade my research as A or B, I know that in Turkey it's not A and B, but people know what I'm speaking about. But this is just ego speaking, because market doesn't know anything about me, market doesn't know me. I'm no one for the market. Market doesn't care if I made money for 5 years, for 10 years, for 5 months, or I lost money. Market simply doesn't care. Market is doing what market is doing. So I need to do what I need to do, which is just reduce my risk. Always when the positions goes against me, I'm going to be reducing the risk. That's the difference, I think, between investing and, trading, because in trading, you're more in control with this. And investing, of course, you can do this reducing of risk, and I'm not that good in this, but like, you would do it after some fundamental change in the company. Maybe, I don't know, they change the CEO, or earnings drop, or, something happens that is company specific. They cannot do some, profit, and they are dropping some project or something. Then you say, okay, my decision was based on, the whole picture, and now this is out of the picture, and, let's say, Elon Musk is not involved with Tesla anymore. Like, the stock is going to drop. Everything is going to be the same, but just because he's not there, stock is going to drop. Definitely. There's, no doubt about this. So, because, he's such an important factor for this. So everybody who is investing in that stock is, my opinion, going to say, oh, things are changed here. So that's the same. And in trading, it's just more frequent. As you said, like, sometimes you don't check the prices for weeks. Like, I don't have this luxury. Like, I need to be in front of the screen. I need to check them, and I need to be aware of what's happening.
Like, in what you do when the market goes against you, you just say, okay, I was wrong, done.
Yes.
I lost a little bit money, fine.
Yes.
In my scenario, if market goes against me, what I feel like, okay, then I'm going to buy more.
Yes.
That's the opposite of what you do. You're cutting the losses. I'm trying to inject more money to that position,
yes.
Because to my views, now the risks are going down because the price goes down.
Yes.
So,
it's different. And you say to yourself, like, the price goes down, but nothing has changed. That's why I'm going to be willing to add more money to this. And in my case, it's like, simply I'm buying and I want to sell in a couple of days, maybe a couple of weeks. I don't going to be holding through earnings periods, or with the type of products that we are trading, it's going to be based on some move or certain event. So I'm not going to be so much, even I can use this word, invested into my stocks. Like, I'm just going to be spinning them. That's going to be that part. And that's why, honestly, because I do this, and this is so much, important for me, and it's how I do the things in trading. That's why for myself, investing was hard. Because I said to myself, okay, I'm going to be just putting some money in this investment account. I'm going to be doing this thing, like, studying the companies, trying to make some, informed decisions about the companies that I want to invest, and then invest my money. And, they start going against me, and this just drove me crazy. And it's not that it was big of a loss or some amount that I cannot handle. The idea was to start small and build on this, but it's just very big frustration for myself that I know this position that I'm just, bleeding small amount of money. And at some point I just said, like, I cannot do this, closed the account, lost almost 40-50% of it, because like all the stock that I bought, they went down. This was 2020 when was the, the bear market in United States. So everything was, not everything, but
also in Turkey it was the same.
Big portion of the stocks were going down. So I just closed them, and I know what, it's working for me and what's going to be better, for my side.
You said your ego is speaking right now.
Yes.
But there are some also similarities between trading and investing.
Yeah.
In investing as well, if your ego starts to talk, not the data, then probably you will lose money.
Yeah, yes. Trading is the same, and ego can be speaking in different ways, because ego can be speaking when you want to be right, meaning that you did the decision for a stock and price goes against you, you're losing money, and ego is speaking, not get rid of the position, but just stay within the position, even though maybe you see that things are going against you. It can be even in investing when, as we said, you're going to be holding the position until you see some fundamental change. But sometimes you can be so much in love into the stock and, into the story, into, whatever is happening. And then let's say the fundamental shift happens, and by your system, you need to close the stock, but you cannot. And this is because, still the ego is speaking, and still you want to be right versus you to be making money. And you say, yeah, but you start making some irrational decisions based on this. So this is also speaking, the ego is speaking. And with us in trading, and also is the same in investing. And it's also like this, the same with, everybody who is making money, is when you have a good run, when you have good month or couple of good months, when you get money, and I've been guilty of this so much, like my ego is inflated, and every trader ego is inflated, and I think that I'm just gonna keep making money. Market is gonna be easy, just keep making money, and then I let my guard down. And I start making some, stupid decisions. I start sleeping some big losers. Then usually I won't do them. And then I end up losing some money that I should not be losing. But this is simply because my ego is telling me, everything is easy, life is easy, and etc. And I just let my guard down. And then what happens is, again, like if you go to the drawdown, your ego is telling you, you can, make the money again. Everything is going to be good. You don't need to change everything. You don't need to do any adjustments. Just keep doing what you are doing. And, if the market is not suitable for what you're doing, you're just going to be losing more money simply because you're listening to your ego, but not your system. So, ego can be very different, which is with the time, like both of us, we found that the default state that you should be is like neutral. So you should not be a lot happy about what's happening, but also you should not be sad. Like, you're in a down period and things are not working for you. You should not be, things are not working and beating yourself. Sometimes we're just beating ourselves for nothing. So staying neutral for me helps, and, kind of kills the ego.
But now I feel comfortable. My biggest, the failures and mistakes comes from because I don't trust myself. I'm the opposite way. I'm doing very good research, everything is fine. Because I don't trust myself, and I'm not social person as well. I'm just a computer guy, nerd, and then I couldn't take that. I couldn't take that position. Huge loss.
Yes.
2013, one of the companies, I did a lot of work. It's Ege industry, a stock in Turkey.
Yes.
I did huge, I know when the ships goes, I know
everything about the company.
I know everything, not everything, but it's enough. He knows a lot.
Yes.
He knows more than me about the car industry and stuff. And then I was like, oh, I cannot buy it right now. I don't know enough, so I didn't buy. And that stock, and because I'm long-term investor, I'm really investing long-term. CAGR was 30%.
Yeah.
Even the Buffett couldn't make that much. But I lost it. Even if I would just put $10,000 here.
Yeah, it would have been fortune, small fortune.
Yes,
yeah.
I lost a fortune. Why? Because I was an idiot, not to trust in myself.
Yeah, this happens to all of us. You know, if I can say, like, one of the solutions that we found for this is sometimes, like, I have this for myself in which is I'm not confident enough to, you know, pull a trigger on a trade that a lot of people are confident in for whatever reason. You know, for my reasons, I don't want to be in that trade. But everybody is like, because we speak with each other, as you said, and like you spoke with your friend, and you know, on the floor I have a lot of people that I'm speaking with, and everybody's like, you're crazy not to be in that stock. Like, you know, we have situations like this, but I don't want to be. So the solution that I found for myself is like, I'm just going to be buying smaller position for this. Like, if the people force me to go this, like, I had the periods in which, you know, in the beginning, and I buy it simply because everybody says, and you know, I buy as much as I can. And sometimes stock goes south, goes against us, and we're losing money. And I'm like, why I did this? Like, why I bought? I should have known better. I know that I shouldn't buy it. We had, you know, moments in which we buy it and it just goes in our direction and we make money. And everybody's like, see, we told you, like, you're going to make money. But, you know, I found for myself that losing money on that trades, that, you know, that's not my idea. It's more emotionally hurting me than, you know, making that money. So the solution for myself, and honestly the solution that I'm giving to the people around me on that situation, is going to be just, you know, buy smaller position. So you said, like, maybe I would have bought $10,000. Like, maybe if
go for $1,000.
Yeah, $1,000, $2,000, like, you can buy, and then easily you can add into this and etc. It's just, you know, establishing the position that is hard. So, you know, my solution for this is like, I'm trying to establish position with way smaller size and way smaller value than I would have done normally.
I learned that lesson very hard way.
Yeah, but we, you know, for how many years you do, you know, the trading and investing combined?
13 years now.
Yeah, so like
12 years, I'm correct.
For 12 years, you saw, you know, everything. Like, you saw the biggest winners, like you saw some stocks that you dodged, that you didn't bought, and, you know, they probably went lower or they went bankrupt and etc. So, you know, for more than a decade, like, you're going to be seeing, you know, the biggest ups, the biggest downs, and everything in between. That's the same in trading. So, you know, it's completely normal to be having these misses. So, that's something that I've been also hard for myself in the early years, which is like, I'm missing some situation in which, you know, I should have done better. I should have made more money in my mind, but I don't. And there is a moment in which, like, I'm beating myself and I'm saying, hey, you know, you did a mistake here and etc. But if I can let go these emotions faster, this is just gonna help me. And at the beginning, I had periods, maybe even sometimes weeks, in which I'm thinking about what happened last week, and, you know, 1-2 days in which I could have bought some stocks and made money, or short them and made money, and I didn't. And this, you know, interferes with all of my performance. It's the same in investing. Like, with the time, you know, you become more experienced and better at your craft, at what you're doing, and it's easy to let go of this. And eventually, you're gonna get that stock again. Like, it's not gonna be that stock that you said, but it's gonna be somebody else, and you're gonna recognize your mistake, you're gonna adjust it, and you're gonna make the money that you're supposed to make. That's my opinion.
So now, if I find a good opportunity, I'm not going binary, 1 or 0. No. Buy low, buy small amount.
Yes.
Now I changed to that.
Yes.
After it cost me already.
Yes, but that's experience. That's experience speaking. So, you know, also, like, as everybody else, like, you're adjusting your mechanisms to enter, to exit, and, you know, to establish position. It's so good that you don't do trading, you do investing, and we do this active trading, but there is so much common ground between us.
Yes.
And, like, you know, we can feel it because we also do the same thing. And, like, I see on the floor so many people, probably one of our best people who is trading here, like, he doesn't take his positions at once. Like, if he needs to take big position, he doesn't take it at once. He's gonna buy something, you know, lower, higher, and etc. And, you know, he's gonna have some average price. And then when he's exiting, he's gonna do the same thing. Like, he's gonna be exiting some positions here, some, you know, size there, and etc. It's gonna do the same thing as you do. And he did this before. So first of all, like, he he had smaller size, now he's having bigger size. So, with bigger size, sometimes you need to do these adjustments. And second, he became better and he realized that he can trade around position and he can do all of these things. For yourself is the same. You said if I'm going to be holding that position for multiple years, establish 10% position, 10 by 10 more, 20, and etc. And you're going to be good. It's the same.
Okay, so you're following the trends. What are the common mistakes if you want to follow the trend? What are the rookie mistakes?
Probably the biggest one I would say is that, it's in the word, so it's trend following, and some people mistake it with trend predicting. So trend following simply means you need to follow the trend. So first of all, there needs to be trend. And sometimes we as trader, we want to make ourselves be the first one who is, catching the trend. As I said, buying from the bottom or shorting from the top. So I think, and especially in the beginning, I've been guilty of this, which is, you're trying to front run the trend. And trading and, trend following especially can be hard sometimes because sometimes the stock would be exiting of some range. If the trend goes up and you need to buy it, like if it does this consolidation and then it goes higher, you need to buy it from all-time high. And for a lot of people, just psychologically, it's hard to buy these all-time highs because people take to their mind how much higher it's gonna go, that stock. It's already an all-time high and I'm buying from here and I'm risking my money so it can go higher. And people want stock to have a correction and then to buy it because they know that it has some place to go. But again, even if you do historical study on all the stocks, and especially on the last, even 100 years of all the super winners, super stocks that went, all of them are going through all-time high. So if the stock, let's say, is trading on $50 and drops to $25, and you buy it from $25 and goes to $50, you're going to make 100%. That's fine if you nail the bottom and if you nail the top. But if I buy it from $50 and it goes to $100, I'm going to be making 100% again. And if it goes to $200, I'm making more than this. And most of the people who bought from the bottom, they cannot be positioning themselves in that stock just because it's psychologically hard. Because they put their barriers on their mind, which is the stock is too high. And again, everybody just needs to go through these stocks to do these studies and to see in order the stock to do these returns, like Nvidia, it's, I think except Bitcoin in the last, I don't know how many years, Nvidia is one of the best performing stocks in the market. The reason that Nvidia is the best performing stock from the market is because it's going through all-time highs consistently.
You cannot go higher if you don't hit the all-time high.
Yeah. So, the Bitcoin is the same. The Bitcoin, I don't know, was 10, 20 years or, I don't know the exact time frame. But in order the Bitcoin to go there, it goes through all-time highs. So you just need to stay with them. So the first thing is you need to stay within the trend and you need to buy when the stock is trending. And, one of the ways to buy it and one of the ways I like to buy it, and even, I do it in the, the products that we do on the derivatives that we are trading here is when there is a trend, after the trend, it's coming resting phase, consolidation phase in which the stock moves from one, price to another, and then it does this consolidation on a daily basis for some period of time, couple of days, maybe couple of weeks. So after it breaks this range, after it breaks the consolidation, is a good time to buy because the stock is already into the range. And if it goes through the, the buy point, you buy it. And, the stop is going to be the, the wall of the range. It can be a bit more technical, but in a nutshell, it's going to be the bottom of the range. So you're just trying to, to catch this and to do this. But if the stock doesn't go to this resting phase and it still doesn't go higher, and if I try to pick it from the first moment in which it goes higher, it's going to be hard. So, and I'm predicting that the stock is going to go higher versus following the trend. And also, I think the second mistake that the people would be doing on the trend following, it's, being so inconsistent with exiting of their positions. So, meaning that, let's say you have a winner.
Okay.
Let's say you have a position in which it goes against your direction. sometimes it's very hard to hold this winner for many people, because like you have unrealized P&L, which is positive, and the stock goes higher, and today you make $500. Tomorrow you make 500 more. Like every day you make money on the stock, and you're like, I need to close it. I'm making $2,000 or $3,000 in that position, and people just want to close it, and people find a reason which is not part of their system, but they find a reason to sell it. And then in 1 month or in 2 months, you see that it went higher, and we are speaking about this, and you're like, I had this stock and then moved so much higher, but I'm not in it, and I'm not making money simply because I didn't follow my plan. And probably the third mistake I would say the people would be doing in this is, like, again, not cutting their losses. So they're going to be doing this, part in which, like, I know where is my entry and I know where is my stop. And the stock moves through my stop, and I see that things are not doing well, things are not moving in my direction, yet I'm not closing my position. And stocks keeps going lower, lower, lower. You are praying about this. You're like, yeah, but even if it goes to break even or some smaller walls, I'm going to close it, and it keeps just going lower, lower, lower.
It will not.
And you will
just destroy yourself.
And you had the opportunity to close it on a small loss and now become big loss. And even you can close it on big loss, but then you need to have some very big winners, or some couple of decent winners just to catch up on that loss. So I think these are the mistakes that people do on the trend following side.
Wow. Okay, I want to ask also some technical questions, but like if I ask, how do you know that you are in the trend?
Yeah.
There are 5 things you can say that you can understand, but also there will be 95 in opposite of that.
Yes.
So it's not like magic formula or something. So what would you ask yourself? Then let me say this.
Yes, I mean, for me, if I need to be able to, identify the trend, so there are some people who are, how to say, would give different answer, but I think that's the good part even in trading, that trading is not, a math test in which like there is only one right answer. There are many right answers, and my answers can be good for me and can be good for you, but cannot be good for anyone. That's fine. My, I would say, variation of this is like, we need to be above the short-term moving averages. So the price, we're going to be speaking here about daily candles. It really doesn't, daily time frame. It doesn't matter, what candlesticks you're using or whatever. So the price should be about 10-day and 20-day, raising moving averages, which means the price goes higher and the moving averages are falling. So that should be like some, mini uptrend. In order we to be on, as the people say on the book, like long-term uptrend, the price of the stock should be on a daily basis above the 200-day moving average. So 200-day moving average represents, the last 200-day movement of the stock. So if the stock is going and, the moving average is moving below it, so this means we're in the uptrend. So when we're in this uptrend, I'm going to be searching for, these consolidations in which I have tight spots in which I'm buying and, the stock goes higher.
Okay, what would you say if someone comes to you, they know too little about trading, and then explain this concept to you, and then they will say, I will just do this, and then I'm hoping to make money. What would you say?
Yep, I would say that it's good, and
go try.
Yeah, it's valid. But I mean, what I also like in in trading, and I'm trying to bring to my trading, it's the concept of simplicity. So we all saw these charts on internet with so many triangles, moving averages, lines in which like you don't see the price, but you see just one very beautiful picture
showing, popping up everywhere.
Some of them are so good, like some of them are like painting, like I want just to print it and to have it, because like I don't understand anything, but it just these people are artists in my opinion. They're so good with this. And for myself, like I try to keep like my charts clean, everything clean, and my mind clean. If I have 10 indicators and I need 10 things to happen in order me to enter the trade, I'm going to be entering in very few trades. If I have 3 things, it's going to be way easier for me to exit and enter that trade. So, I'm trying to have this simplicity in my mind, the way I'm trying to explain it and the way that you explain it to me, it seems that it's something very simple, and that's good. How we as human wants to make things complicated, but they're very simple. And he's just giving this simple concept, which is just buy when it goes through the buy point, and stay with your stop. So I think this is good. And there are so many additional small layers to this, but again, this is just part of the overall system and overall education. And another thing that we need to mention is sometimes, I would say for myself, it's going to be market environment. I mentioned this. So let's say 2022. Okay. We have a bear market and market goes down. If I want to buy stocks, there are not many stocks that are going in the uptrend. There are not many stocks that are rising. So it's very hard to, do this strategy. Maybe you can do the opposite strategy, which is just short when things go down. That's different. But, you need to readjust, and you're coming after 2020 and 2021, which are, exceptional years for the markets, and, some crazy moves that happen. So if, the market is not good for what I'm doing, it really doesn't matter if I have the simplest strategy or the most complicated, or like I have the best research or the best entries. It's just not gonna work. I think, as I said, in the investing is the same, and you can say more about this. But let's say in the beginning of the year we had the last couple of months this correction because of the tariffs that Trump put to everybody. So a lot of good companies that now are making all-time highs and etc. also corrected like 20%, 30% and etc. And nothing bad happened on the companies as we spoke, and maybe somebody who is investors bought more shares in them, but simply because there was, overall panic on the market and overall everything is selling. Also, these companies are going to be pushed. So that's the same. What, for example, you did on the correction last couple of months?
I don't trade. I don't invest in the United States. I only invest in the Turkish stock market, and it was a little bit different. There were some companies would get benefit from the tariff because it was easier for Turkish firms. Also, there were threats like if the China is not comfortable with United States, then what he is going to do?
Yes.
Then he will push all the products to the other markets like third world, world companies. So what I did is I just tried to understand, like I know what all of my companies, what they do, if they would really affect. And then I checked, and then I was like, okay, it's all right. Only one of my company was maybe affected. Yeah. Let's say the tariff will keep going on. And then I was like, okay, is it really a big damage to my company? I think. And I was like, not that much. And then I said, okay, then don't touch anything. Did I lose money in that period of time? Like I lost more money when there was like 19 March. One of the mayor, Istanbul mayor, is arrested. I lost money in that period of time. I lost big money as well. Yes. But in the other hand, my businesses are not affected.
Yes.
They were still selling the same cars, same amount, same profit margin.
Yes.
So I didn't make panic. I make panic when the things are affecting my company. Yes. Really. Then I really my hands are shaking. Do more research, do my homework. Let me call some of my guys that they know that company, like what's going on, like I need information. Then I'm making panic. But if it's like from the outside, then I'm fine.
Yes. The same thing again.
What was your biggest loss? Like you open a position and you lose so much money.
Yeah, I mean, on a single trade, I cannot say so much, but I can speak about a day in which, I experienced my biggest losing day. I think was about 40-some K, 42K or something like this. And it was in 2020 in April. So, as we all remember, end of February and the whole March in 2020, there was, the COVID started, picking up steam and, lockdowns and everything. And, the US market corrected a lot. So we did very well in the sell-off, like when the stock was going down, like we shorted a lot of stocks, we made a lot of money. And, probably any one of us, and even, people who started here with the company did very, very well. So we had, our egos a bit inflated, and also we had our confidence a bit inflated on that period in which we made money. And then what happened was the market bottomed sometime in March and tried to recover, and it did small correction. And on that small correction, everything that was spoken on the news, I'm pretty sure it was here the same, but we listened to, CNBC in States and, every other places was, this COVID is gonna last maybe years, nothing, we don't know what's gonna happen. Everything was negative, but the market was not making new lows. And all of us, we shorted so many stocks, and the people that were here, we are so bearish. We are, this is exactly thing that's gonna happen. Market is gonna make new lows. Maybe it's gonna correct. Not 35, but 50%. Who knows what's gonna happen? Everybody is at home. Everybody's, we don't know what's gonna happen, and we are super bearish. We made money, and we had such a big boost of this, which is even if you lose money, that's fine. You made a lot of money, previous months, so it's fine. So we are shorting, and we are expecting the market to keep going lower. But what's happening over the weekend? There is a news from Moderna that they are saying we invented vaccine for the COVID. This is you can see, this was the first time when they spoke about the vaccine, first time ever on the correction. And the market is getting, I don't remember how much, 5-6% or whatever on Monday.
And you are on the short position.
And we are only short. And we are losing money. And even the market is not open. It's pre-market trading. But we know that we're going to be losing money. And we know that's going to be tough. And it was so tough for us just to go to this. And, we got rid of the positions. We closed this. But I can speak for myself. This was my, worst day, 40 some K. And it was, my biggest loss. The good thing was that before that, I made a lot more money, but it was just felt bad. I cannot undersell it. It felt bad, and it felt blindsided on that side because, everything was so bearish. And over the weekend, you see this, and also psychologically it's hard because you want to make money, but you want to have the cure for the COVID, and this vaccine actually it's saying that, and everybody starts saying, people who got vaccinated, this is gonna get end really soon, and etc. So it's positive news. And before that, my emotions are we are gonna stay in lockdowns, it's gonna be super hard, and etc. And now my emotions are switching. Maybe things are gonna be good, but I took my biggest loss, in my career. So it was hard. I needed some time to readjust, but everything was okay. So 2020, I remember this day to the day, that day.
Well, I hope you will never see a day again like that.
Yeah, I mean...
and also not only you, your whole company is shorting everything.
Yeah.
And then they're talking about vaccines, they're talking about how good it will be.
Yeah, it was crazy, but these moments, 2020, 2021, we had many crazy moments, and it was something that we didn't experience. Most of us started trading, 2011, 2012, 2013, and no one of us traded, 2008, 2009, when in States was, the mortgage-backed crisis and everything else. So this was before that we had volatility, and sometimes we had big volatility, but this was beyond what we've seen, and it was so interesting to us. Again, we took advantage of this, but also we took some losses, and we needed to take some lessons from this.
Is it easy to become a trader?
No, it's not easy. But here is, the tricky part, which is nothing is easy, I would say. And again, I completely understand, the questions, and I'm also frustrated by this because sometimes we have, we saw all of these videos, I don't know, YouTube, videos, post or whatever, everybody say just buy my magic indicator, just do these things and you're gonna be successful, and etc. But again, successful in trading for me doesn't mean that you start making money, you make some money and that's all. Successful means you're successful over extended period of times, 5 years, 10 years, 15 years, 20 years, and etc. Maybe you make money for a couple of years, perfect, that's good. But then there are so many tests. Like market is always testing us, as traders, as humans, and etc. Like you have all kinds of tests all the time. Some of them actually we are failing. Some of them, we are learning from them. Some of them, we know how to just avoid. But it's not easy simply because nothing in life is easy. It's not easy to become YouTuber, to become investor, to become even it's not easy to go and work in the, in the mall and to be selling quotes and etc. Because then, most probably it's not going to be the life that you want to live. So for myself, it's not easy. And as I mentioned earlier, it should be something that you really enjoy doing all the time, because there are moments in which it's so good, you make money, everybody's making money. It's like amazing period in which you enjoy, life is easy. But there are periods in which you just, so many tests, and if you don't enjoy what you're doing, very quickly you can start doubts in yourself and say, maybe this is not for me, maybe trading it's not for me, maybe I need to do something secure where I have the salary every month and it's happening. But then if you do the brainstorm, which is easy to be employed and just to have the salary on the side and, not to have the upside of, you being rewarded by the markets and the good markets condition, etc., then you can decide. For me, I would say it's not easy, but if you can stay, it's well worth it, in my opinion.
I love watching video. I watched some YouTube videos.
Yeah.
They were like, oh, they're making money in easy. And
Yes.
I bought some courses in Udemy.
Yes.
I paid some money. So now can I be successful?
How many people actually become successful like this? Because we see them, and even the guy who said, let's say there is a guy who said, I bought these courses, I watched the videos, and I trade from home, and I become successful. For every guy who is successful like this, in my opinion, there are 100 guys who did it and they were not successful, because they are trading from home and because they are trying to find the strategy and are struggling with the markets with all kinds of challenges. So short answer is yes, but I think again, just to redirect a bit, the answer is what's the chances of actually you becoming trader from home? So if you don't have the proper training and the proper environment, it's going to be way harder. It's not going to be impossible. We all know there are some amazing examples and some amazing traders through the years that become successful at home. But these are, in my opinion, more than outliers than the the norm. But if we need to do a study for people who actually become successful, on the trading force, as I said, in States, probably there are, I don't know, a couple of hundred companies like ours, and they are training people. How many more people become successful in these companies, on the trading force in the banks, like here trading force in the banks, versus people who are trading from home? It's, I would think, the education in the companies and everything that it's provided beats a lot more people. Everybody can from home, it's just super hard.
Well, right now, because the trading in a short term is a zero-sum game,
Yes.
You're competing against, let's say, Goldman Sachs, and
Yes.
you're trading in the United States.
Yes.
So how do you compete with Goldman Sachs and Bank of America, you name it?
Yeah, yes, I mean, definitely there is competition, but again, the way we do it, and most of our strategies are, revolving around we trying to be with these institutions rather
Not
than
directly against, but
rather than I mean, for example, we're going to be not going to be trading against some institution. For example, we're going to be not going to be trading against some institution. We are going to be trying to figure out what they're doing and, have access to some information that, what they're buying, what they're selling, and etc. So we can take advantage of this. And, couple of our core strategies, actually, not to going deep, but couple of our core strategies are going into this, how we take advantage of these institutions, because, just a hint, maybe we cannot trade against Goldman Sachs, which, they're going to be extremely good at what they're doing, and, they're not going to be giving away, if I can use this term, so much money, but what if there are any institutions, like any managers, any funds which are managing other people's money, and they don't care so much about their money. They don't care so much about their executions. They don't care about their persistency. And like the way we say it is like they're throwing money away. So can you take advantage of this?
Yes.
Yes. So that's
so
what we're trying
your eyes,
to do.
they are like the praise.
Yeah, because you're the fund manager, you have, you know,
I will get my fee,
Yeah.
2% fee.
Yes.
I don't care.
You need to be invested all the time. Like your investment strategy means that you need to be invested 100% of the time.
Yes.
So this means that there are fresh money coming to the fund every month, and etc. And you need to invest them. Sometimes there is no place to invest them, yet you need to push them somewhere. And you start doing some stupid things just because, first of all, like you need to be invested. Second of all, you don't care.
Legally, you have to do it.
Yeah. And you do it and you start, you know, pushing some prices, start doing some, you know, irrational things. And then when we are coming, and then we are like saying, you know, this is undervalued, this is overvalued, and etc. And then, you know, we are taking position against this. And if that's the case, like then, you know, price goes to normal and, you know, we make the profit. So that's going to be very brief explanation about this. So yeah, you cannot trade against them, but you can find some institutions with which like you can be, you know, small fish with which you can, you know, be taking some profits.
You say one, I see 100, but yeah. Okay.
Yeah, but again, like...
Well, that's the kind of law of nature.
Yes.
I'm a book guy. Like, I want to read some books about trading. What's your suggestion?
All right, that's actually, you know, one of my favorite topics, honestly. So there are so many books about trading. So first book that I'm going to be recommending, it's called Market Wizards. So there are a couple of, you know, editions. I think last was in 2022. So they have five books, Market Wizards. The first one is very good, but honestly, like I like all of them. And as far as I know, and I see it here on the floor, like there is even like one translated in Turkish. Like the first one, it's even translated in Turkish. I don't know about the others, but the first one is so good. Like have interviews with some amazing traders, which, you know, honestly, like changed even my trading so much in my life. So that's going to be the first recommendation. Second, it's going to be Reminiscence of a Stock Operator. I think this also, they have it here in Turkish. I don't know. You know, I don't know the Turkish, you know, translation, but Reminiscence of a Stock Operator is going to be the second book that I'm going to be suggesting. Third book, honestly, that I'm going to be suggesting, it's going to be that it's not so much about trading, but it's going to be, you know, trading, investing, and like life in general. It's going to be this Ray Dalio Principles. Yeah, it's very good book. I like it a lot, and it's honestly on two parts. So, you know, it has about management, but it has amazing, you know, insights about life and, you know, trading and even investing in general. So the first part is like one of my, you know, all-time favorites, and I really like it. And maybe I know that the people are more into, you know, more deeper connection with the books and what to be done. So I would recommend two more books which are more trading psychology. So first, one of them, it's called like Mindset Secrets of Winnings by Mark Minervini. So this is also, he's a trader. He's, you know, very famous trader. He has very good track record. And this book, it's like about success in general. It's not only about stock trading, but you know, have universal laws where you can do them and you can apply them in every area in life. So even if you're not trader, even if you're not even investor, even if you want to do some other kind of business, that book is very good. And probably by now the people always speak about trading psychology. So Trading in the Zone, I'm
Mark
Douglas. Like there is Trading in the Zone by Douglas, there is Trading in the Zone by Ari Kiev. But Trading in the Zone, Mark Douglas, is probably one of the book in which I spoke with her, I spoke about book with so many people, and no one gave ever negative feedback for the book. Everybody, like, it really doesn't matter if you're new trader in 1 year, 5 years, 10 years, like first time when you read it and everybody is just saying this book was so insightful, so many things, and people were saying like, this book is like written for me every time. And when I read it first time, it was the same for me, and it's a book that you can read multiple times.
What you also was feeling,
yes,
what you observe, it's in the book already.
Yes, exactly. And again, like this is the book. Some books, recommend some book to somebody and they say like, yeah, I read it, but it's not good. I don't like it, or whatever. But that's the only book in which no one said, I didn't like that book. So that's why like it's, about trading psychology. I know so many people went to, trading psychology.
Have you also read the Disciplined Trader?
Disciplined Trader, Mark Douglas. Yeah.
So you're just book consumer as well?
Yeah, I mean, I am a lot like, this is part of being successful, and especially in trading, definitely. Before coming actually into the company, I didn't read any book except that books in universities and etc. But once I realized that that's kind of like, even you can say cheat code in a way in which like I'm taking other people opinions, other people experience, other people failures, mistakes and everything, and I just can consume them in 200-300 pages and can relate to them. I realized that that's pushed me ahead. I just kept doing them. So yeah, I mean I cannot say that I read all books about trading because that's impossible. But all of them, these classic books and etc. Most of them, Mark Douglas, Ari Kiev, all of them, like they're very good.
Pleasure to talk to you.
Nice to be on the podcast, and I hope to be seeing you soon again.